So mortgage hack number one, the one thing that differentiates astute investor from favored investor, and that one thing is that the astute investor have a clear exit strategy. And so what is an exit strategy? So a lot of the time when you build a portfolio, a lot of people just say, oh, I want to build 10 property in 10 years. But what they have might what they might fail to remember is that the number of properties is only a means to an end, because at the end of the day, you're trying to build a lifestyle. You're trying to have enough cash flow so that you can do the things that's important to you without really thinking twice about it, or just stop working in general and have that cash flow coming in, and not have to dig into the capital. So exit strategy is a contingency plan that's executed by an investor. Okay, so you might consider liquidating, you might be disposing some of the assets, but it's all about hitting a predetermined criteria. And what does that look like in property? So liquidation might mean you're selling down your portfolio to cash out. Recapitalization, reducing your debt levels through other reallocations. So you might be selling down and then putting some of that money into other assets that's going to have higher cash flow, or maybe you're looking at lower risk. Because if you talk to any really wealthy people, what happens is as they grow their portfolio or their assets grow, they're actually just looking for something that has steady returns with less volatility. So you might want to recapitalize your position. And then third one is you could potentially look at trading yields, and simply put is selling some of your lower yielding assets, lower performing assets, and going for much higher cash flow assets. And if you guys actually want to learn more on just particularly on how you could trade assets, on how clients have, gone from like a 2 mil equity position to 200K passive income, we have a webinar on our website on mhq.co.nz. If you just look under education, and what happens is there's a webinar, the 60-minute webinar will have a lot more in it and about trading yields. So an example of an exit strategy, get to 2 mil equity position and reinvest the capital, liquidate and recapitalize, and expect a 10% cash on cash return to generate $200,000 passive income. So cash on cash return is quite important when you are trying to push your position towards cash flow. Okay, less important when you're just trying to bulk up, like so to speak. When you're trying to build up your portfolio, first of all, it's just to build up enough capital first. And in that position, you're just trying to maximize your leverage safely, getting the most cash flow possible. But when you're trying to dial down and rejig your portfolio, cash on cash return is one of the most important metric. And I'm not going to dive too much into cash on cash return here. If it's something new to you, you should write it down as homework for you guys to Google what cash on cash return is. Okay, so you can actually check out stage 3 masterclass that's going to actually explain that a lot more. Okay, so in summary, capital gains make you rich, but cash flow is what truly liberates you and allows you to have those financial position. And this is a question that I want you guys to reflect on. If you guys are still here listening, if you guys are building a portfolio, right, what is your free cash flow goal? How much free cash flow would you like from your portfolio? Instead of trying to aim for a certain amount of properties, how much cash flow do you want to aim for? Just write that down. Okay. And so, you don't really want to be in a position where you're stressed about the debt, because you're just constantly just chasing, right? Chasing, trying to pay for your next mortgage repayment. Because a lot of people's portfolio, when they come to us, they might be in that position where there's a lot of equity, but it's just not a whole bunch of cash flow, and they don't have much flexibility with the banks. And they're always told that they're maxed out, still work 9 to 5 to service their portfolio, and that's not where we want to be in. The position where we want to be in is a lean, mean cash flow machine. And the most important thing is just defining that portfolio net profit goal, and then we can reverse engineer on how to reshuffle your portfolio to get the cash flow out of it. If you want to learn exactly how you can set up your next 3 property purchase, do check out the Stage 2 Masterclass in the description below. Until the next video, I'll see you again.